because, oh, I'm a trader, I have to be trading all day long. There's no perfect strategy. There's no like, oh, I have the magic equation and I'm going to solve the market.
The trading is a lonely job. What about you? Do you feel lonely sometimes?
Yeah, it can be.
Was there a time when you doubted yourself, that you just wanted to give up? And
Oh, all the time. I mean, there are still times I'm like, why am I freaking doing this?
Today I have got with me a very special guest, Robert Falco, who is the CEO and founder of Falconium Trading. Also, he is the former senior vice president of Wells Fargo, also investor, trader, and coach. Hello, Robert. Welcome to the interview.
Yeah, thanks for having me. I'm super excited. Appreciate the invite.
Yeah, I'm really happy that Leah recommended you. So I can't wait to do the interview with you because I know that your background is very interesting, especially the time when you were in Wells Fargo.
Yeah.
I know that unfortunately you can't really talk about the scandal as much as I would love to hear, but but anyway, today I would love to focus on your trading career. But before we jump into trading, I would love to know a little bit more about your background.
Yeah, for sure. So I started in banking when I was 19 years old, like all the way to from teller all the way up to when I was the area president for Southern Idaho and Eastern Oregon, and I had a title of senior vice president as well. So I learned a lot, like about banking, whether it's commercial and a little bit on the investment banking side, but not as much. So I had always been investing in like my 401k, and I had some smaller. I think at one time it was like Scott Trade, an account where you'd have to send your checks in the mail, and then it was like $14 for a trade or something like that, back in the day. So I had some small accounts like that. And then I got into options a little bit, but it obviously was very sporadic because I was so busy in, my regular career. And then in 2016, 17, I think it was when I got laid off from Wells Fargo and I had a severance package that was paying me out for quite a bit of time. And so I took that time to say, hey, I'm never going to be in a position again where some other like random um, HR person, can decide my fate, in some room where, I had done like a really good job. And so I'm never going to put myself in that position again. And I almost felt like a politician too in corporate America. And I really don't like that. I like to, be my own person. And so trading allows me to work from wherever I want, number one. And then number two, like I'm my own boss. I don't have customers from a standpoint of like the customers of the stocks. So if I don't want to talk to them, I don't have to look at them, that kind of thing. So it's fun from that standpoint. And so that's when I made the switch to trading, quote unquote, full time. I think a lot of
Okay,
times
so
people,
you jumped straight away to full-time trading?
yeah, yep.
Wow. So what was the beginning for you?
So I was learning a little bit more in depth as far as like day trading from another company at the time, and I got some coaching from them, which was really good. I ended up working for them for a while, and then
Okay.
left and started my own thing. And so I think the biggest thing was when people think of a full-time trader, they think, oh, you're sitting in front of the computer, like literally trading hundreds of times a day. And that's not the case because a lot of the intraday movement in the market, in my opinion, is just noise and not very meaningful. And so you really have to do a very good job of waiting for your particular setup. And then that's when you want to put your money at risk for the short-term day trades. Long-term is obviously a different ball game. And then, there's some swing trading that goes on, which swing trading would be anything that I hold overnight all the way to like months on end. And then long term is usually like a year plus. And then I started learning about option selling, which is really cool to me because I know how profitable selling insurance is, being that I came from a financial services background. And so I sell a lot of options, which is essentially selling insurance, which is fairly profitable as well. But you have to have a little bit larger an account for that because of just the risk. And so I know that's not available to everyone.
Mhm. Let's go back to the beginning of your trading career. So, were you profitable straight from the beginning, or
With
was
day
there a
trading,
time?
no.
Yeah.
So I was lucky enough that, again, I started out with a relatively good size account.
Hmm.
Uh, but I
So,
was
how big was
risking.
your account when you started?
When I first started, I think I just put 50,000 into an
Hmm.
account, and I started with I trade an R, what's called an R, like a risk unit. I think Leah
Hmm.
talked about it. It's the same thing. So on every trade, like I know exactly how much I could lose, and then obviously whether I'm long or short, like if it goes up or down, you can make multiple of that.
Hmm.
So when I started with a $50 R because I didn't
Hmm.
need to make money. I
Hmm.
still had that income coming in from my severance package. I don't have a lot of bills. A lot of it depends on your lifestyle too. Like if you're
Hmm.
living very extravagantly, then you need to make even more money. And so I didn't have to make money right out the gate. So I started with a $50 R, and I was just trading like everything. I mean, every little candle setup that I saw, I was trading, and it was just too much. And so it got to the
Hmm.
point where I started focusing on like, okay, here's six tick. My watch list is only going to be six tickers long every single day.
Hmm.
And those are the only ones I'm going to trade. If I'm going to move on from one of those tickers and to a new one, I have to delete it off my watch list, and then I can add a new one on.
Hmm.
But other than that, I was sticking to just those six. And so that way I was limiting my trades, and I would give myself, hey, you have 50 trades for the month, let's say, and that's it. Once you're
Hmm.
done with those 50 trades, you're done. You can't trade anymore for the month. So that way,
Hmm.
less is more, and that way I upped my R over time to where
Hmm.
you're
Hmm.
risking more and more per trade. And now, generally, as far as like a day trade, I do
Hmm.
between like 1 to usually 4 is my max
Hmm.
on
Hmm.
on any given day. Now,
Yeah.
obviously, I'll still modify like some longer term positions, or like today I bought to close a covered call on Disney, in my
Uh-huh.
long-term account. So I'll do little stuff like that. I don't count that in my quote unquote day trades though. So,
Okay. Okay. So you switched from scalping to day trading?
um, yeah, scalping, I think, is a term that is often misunderstood from a standpoint of like you're just in and out really quick. And I think a lot of
Mm.
times people are in and out really quick because they don't know what else to do. So they see like they panic exit whenever they're green, right? Like, oh, I'm up
Mm.
$100. Like, let me get out.
Mm.
Um, One of the things that made me go from where I was like barely profitable or just like breaking even to
Mm.
consistently profitable or more profitable was selling. If I'm long stocks, I sell at resistance or I sell into strength. I don't wait to
Mm.
get trailed out where the stop, comes, or where the stock comes back down and hits my stop and trails me out. I'll sell into strength. I sell at particular, resistance and or buy to cover if I'm short at
Mm.
support levels. Like I was short Teladoc overnight yesterday with earnings, and I covered, at
Mm.
1760. I think it was 1650 this morning. Stock's at $15.30
I know
now.
it just jumped down like by 25%, right? I
Yeah,
just saw it like on my mobile. Unbelievable. I invested into Teladoc like 2 years ago, and I lost so much money on it. That's why I don't really like Teladoc anymore. But
yeah.
now I'm really happy that I sold it like a year ago, because
Hmm.
since then it has just going down. It's, yeah, I think it used to be like around 200. Now it's like 15,
Yeah.
16, right?
Yeah, and so like
Crazy. Yeah.
I'll buy to cover at support, like rather than try to hold for. And so today, like I could have made more money, but I'm
Mm.
never gonna buy the exact bottom and sell the
Yeah.
exact top. And so getting out at specific levels, I still want good risk reward, but I know a lot of times people will say, oh, well, if you risk 1 R, you need to make 3 Rs in order to be
Mm.
profitable. Well, not every trade is going to go to 3 Rs. And the
Yeah.
market doesn't care what your R is. If there's
Mm.
a resistance level and the price action, the price trumps everything. If the price
Mm.
action shows you that, hey, there's sellers at this level and they're not letting it through, it doesn't matter if it's 0.8R or 0.6R or 1.1R or 1.85R, like you probably need to sell because
Mm.
the price action is telling you there's resistance at this level, and you might as well take the gain that you have because you never know where it's going to go from there. No one knows 100% what's going to
Mhm,
happen.
mhm.
It's all a game of probabilities.
Yeah. Let's talk more about your trading strategy. Do you have any checklist that you have to, check before you place an order? Maybe could you just tell us more about the strategy?
Yeah, I think the way you worded it is actually really awesome. So like check marks. So
Yeah.
there's no perfect strategy. There's
Mm,
no like, oh, I have the magic equation and I'm going to solve the market. That doesn't happen because the markets, all the trades happen. And yes, there's some algorithms, but like humans program the algos,
mm,
so we
mm,
program our own, emotions and everything else into the market. And so there's never going to be anything perfect. So when
mm,
I look at a trade, I want to say, okay, how many check marks can I get? So like for a day trade, I like trading based on gap sentiment. So like,
mm,
is the gap strong? Like, are there people trapped on the other side of the trade? So if I'm going long and I know a bunch of people were shorting a stock, yesterday, or like Palantir earnings, I think recently was one where
yeah.
Palantir like sold off right before earnings. So earnings gaps obviously are really nice. So those are additional check marks. And if I say, okay, there's a bunch of people trapped from yesterday, if they're short, how do they get out of the trade? They have to buy to cover. Well, if they have to buy to
Mm,
cover, I want to be buying with them as the stock price gets driven up from all of that buying, or vice versa. If there's a lot of people that bought and they're trapped the next day because of a gap down, in order to get out of that position, they have to sell. So I want to sell with them. I want to
mm,
ride the wave with the market. So there are certain things like, is it a good gap? Is it an earnings gap? Not every ticker is in play every day. And there's some people that think like, oh, you can trade the same ticker every day. I don't think that that's the case. Not every stock is in play every day.
mm,
And then specific like candle setups, I like compression and price action. But
mhm,
compression usually leads to expansion. So I like to see multiple candles of compression. I like to see where volume is coming in, like undercuts and rallies. So, like the Qs this morning is a little bit of an example. Right now, it's starting to bounce.
mhm,
It undercut yesterday's low price action and then it started to recover it. So, like something like that, I like to
mhm,
see those types of things. So, as the trades look like they're setting up for me, I'll go through a process mentally of like checking boxes to see, okay,
mm,
how many check marks can I get on this? And the more the better. If it's just one check mark and I'm bored and so I want to trade because, oh, I'm a trader, I have to be trading all day long. Like, which is
yeah. So what
very like,
else should you do, right?
yeah, it's very what's the word I'm looking for? It's very easy to get sucked into that. Like, oh, I need to be in a trade. I need to make money today. And then you get in a trade and you're like, oh, this thing was like a C minus. Why the heck did I trade this? Or if I only wait for A and B setups, I'm
Hmm.
probably just going to be more profitable.
Yeah. Are there days that you don't trade at all?
Yeah, a lot.
Yeah. Yeah, because you just don't see the setup, the right setup.
Yeah, so if the market's not really gapping very much, in addition to the individual stock gapping, I like when the indices gap. So like the
Mm,
SPY and the QQQ, if they gap out of the prior day's price range, I like that a little bit better. When it's inside gap days on the overall market, I'm not very aggressive on that unless
mm,
like an individual stock has a really good catalyst like news or earnings or something. Otherwise, there's a lot of chop. I believe that there is so much
mm,
price action that again is literally meaningless. Like people that would trade the indices every single day are like, oh, I trade futures every single day. I don't believe that there's an edge in that every
mm,
single day,
mm,
especially futures, because the market is pretty efficient. I don't believe that in the efficient market theory. However,
mm,
if the most liquid market in the planet is like the S&P 500 or the E-mini futures, you think that you're going to beat the most, that's the most efficient pricing
mm,
mechanism in the entire world. Like there's just no way that you're going to beat that day in and day out. Like I have to see that I have edge, and so some
mm,
days there are really nice trades on the indices, but I don't think it's every day.
mm,
And so
mm,
there's
mm,
days that, yeah, I'll sit and watch, usually for like 3 hours or so. And then I'm like, okay, if I don't see anything, I need to get
mm.
up and go do something else, like go do laundry or mow the lawn or plenty of other things that I could do so that I don't get in a trade that
Mm.
really was never there in the first place. And I was just bored.
Yeah. I know that in one of your interviews, you mentioned that some strategies, they just stop working out, after a while. I thought that once I find a profitable strategy, then I am pretty okay till the rest of my life. So, how come some strategies just stopped working out?
So again, the stock market is a
Mm.
ongoing auction that's constantly trying to digest and price in like every piece of news and every inefficiency.
Mhm.
And so when we find that's why we can trade profitably is we find inefficiencies in the market, and this is why I think the market will never be 100% algo driven.
Mhm.
And by people often think like, oh, algos just make money all the time. Well, algorithms lose all the time. Like a
Mhm.
perfect example was Lyft the other day, where the algorithm read 500% basis point increase in their profit margin or something like that. And it was just bidding it up, bidding it up, bidding it up. And then they said, oh, it was actually 50 basis points. And then it's like, oh crap. And then it started selling. That wasn't humans doing that. That was algos that got caught probably that just scan headlines. And so there are
Mhm.
these tiny inefficiencies in the market. And after a while, especially once more people start to find them, they stop working because then everyone else is doing them too. So one of the books that I read, I think it's actually in The Intelligent Investor by Benjamin Graham.
Mhm.
But he talks about how over the course of history, whether it was like the Nifty 50, the dogs of the Dow theory, like, oh, buy the lowest five stocks that performed in the Dow last year for this year. Well, then once everybody starts doing that, well, there's no edge anymore.
Mhm.
And so those strategies will stop working. Or if I'm trading momentum, so let's say like NVIDIA and SMCI, like for until what, Friday, you could literally last week, you could have literally bought SMCI at any point
Mhm.
pretty much during the day and you were going to make money because
Yeah.
the momentum was there. And so you
Mhm.
didn't necessarily need like a really good edge or strategy. Like that's just a momentum play. But when that momentum is gone, like the momentum is pretty much gone now after that big drop on Friday, maybe it'll come back. But if you
Mhm.
try to start or keep playing momentum strategies like that, when the momentum dries up because the market expands and contracts and goes through different cycles. And if you continually try to use the same thing after the market shifted, the edge that you had that was there that created,
Mhm.
let's say you made 500 bucks from it. Well, if you keep using that strategy, eventually the edge is going to go away. You're going to give all of that money back. So like
Mhm.
recognizing, okay, this strategy does not work anymore. And so I
Mhm.
need to shift to something else. And that's why I think it takes a long time for people to really learn how to trade well because they have to survive long enough to see the market go through different cycles.
Mhm.
Everyone was a professional swing trader in 2017 because all you had to do was buy every stock off the 50 EMA because we just slowly went higher and higher. And I literally remember February, I think it was 5th, I think of 2018. 'Cause I was in
Mhm.
jury duty and the market like dropped massively. And I'm like, oh my gosh, I can't trade. My phone's locked up. Um, and that edge was now gone. It became very
Mhm.
choppy. And so it was no longer the slow grind market. And if you tried to do that from a swing trading standpoint, you were toast because it just
Mhm.
wasn't working anymore. Eventually, those things come back around and
Mhm.
start working again. But in my opinion, that's why the edges, will disappear and then they'll come back. And so you have to have
Mhm.
multiple tools in your tool belt.
Mhm.
It's kind of like building a house. You can't only use a hammer. If all you have is a hammer, everything is a nail, and that doesn't work out well.
No, absolutely not. So, you trade mainly options and stocks and some
Yeah,
futures.
primarily equities, and then options usually for hedging or selling
Hmm.
options. Like I talked about Teladoc. I did buy Teladoc puts yesterday before the
Hmm.
close, and then I bought shares, and then I can just exercise my puts
Mhm, mhm, mhm,
in
mhm.
order to
So,
lock that
so,
gain
so
in.
you don't trade, currency at all.
I don't trade forex really at all now. I don't. Have
And
I
what's the
ever?
reason behind?
I just I can only you can only do so much. Like if I traded, so I have traded futures. I do it every so often. Like when there were, and again, I don't want to make it sound like I'm trying to take advantage of political and global events. But like when we knew that that there was going to be strikes in Syria or whatever it was a couple
Mm,
weeks ago, when the U.S. like telegraphed all these strikes, I'm like, hey, I'm going to watch oil after hours.
mm,
Like if they're going to drop bombs in the Middle East tonight, I need to watch oil because it's probably going to spike oil prices. So stuff
mhm,
like that, I'll probably,
mhm,
watch the futures. Otherwise, you're just, if I get up at 6 in the morning and I'm
mm,
watching the market, on and off most of the day, and by the time my wife gets home and like we have dinner, and it's like I don't want to be back on the computer looking at
mm,
futures. And then it's like I dabbled in crypto, a little bit for a while, made some money on a crap coin, and
mm.
then, which was ended up literally being like the top. But it's just there's too many things to trade. Like you can't
Mm,
trade everything,
mm,
otherwise
mhm.
you'll literally never be able to do anything else.
No, 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 absolutely. Um, you said that you started with 50,000 like in 2016. How big is your account right now?
So my day trading account is well over six figures, and then my
Mm.
long term account is seven figures.
Wow.
That's like retirement money, obviously. Um, some of my largest winners there I've had for like a really long time. I mean, that's
Yeah.
like Google. I think my average is like $12 now with the split and everything. So
Seriously?
yeah. Yeah. So some of those like long term positions, like I will
Mm.
never, most of my long term money is in like index stuff.
Mm.
So let's say the SPY, right? Like I would
Yeah.
never sell all of my SPY. Like there's no
Hmm.
point because at some point the S&P 500 is going to bounce. And even though I trade, like I'm not good enough to get the exact high and low. And
Hmm.
I'm 40 years old. I turned 41 in May. And so I still have 20 years left. So it's like there's going to be ups and downs. So some of those longer term positions, I'll trim some. Like I sold some SPY at 500 just in case like
Mm.
that was the exact top, and then we went down from there. But it was like a small amount. And then if we drop, 5-10%, I'll put that position back on. So I'll
Mm.
do
Mm.
stuff like
Mm.
that, or I'll hedge a little bit with options. I'm not saying that I don't ever, trade in my IRA. I do, but I try to keep it to a little bit more of a minimum. The longer term
Mhm.
stuff is just much easier to do
Yeah.
because it really is one of those things in trading. The more money you have, the easier it is because there are strategies that are available to you that aren't available to someone
Mm.
else,
Mhm.
because they
Mhm.
don't have the type of buying power and margin in order to
Mm.
put up on some of these positions. Like in
Okay.
COVID during 2020, I think the VIX was at like 85 or something like that. I was selling puts on spot. Like SPY would have had to drop 25% over a weekend in order for me to get put shares of the SPY. And
Mm.
if it
Mm.
did, then I was like, okay, cool. I'll be all in on the SPY. But obviously it didn't. So it's like that was easy money for me to pick
Yeah.
up multiple hundreds of dollars over the weekend just by selling puts. But that required a lot of buying power or margin
Mm.
that if you have a smaller account, like you just don't have. So you're not able to take advantage of that
Mm.
type of spread, and premium out there in the options world.
Mhm. So you have like two portfolios, one for long term where you have your like equities, and then the second account just for day trading.
Yeah, I
Because
think I have like
because when I,
five
when I
accounts. Yeah.
yeah, it's the same. When I had an interview with Leah, she was saying the same. I think she had like five or seven different accounts.
Yeah.
One was like dividends. Second one was like stocks. Then like for trading, etc. So she had like quite a few accounts.
Yeah.
So
So
what
in the
about you?
US, we have two kind of different, primarily, I mean, there's a couple others, but we pretty much
Mm-hmm.
have two primary forms of a retirement account. One's called a Roth IRA, which any money that you put in it right now is taxed. And then
Mm-hmm.
anything that you make is tax free after you're 59 and a half. Like I have a Roth IRA, and then I have a traditional IRA. Traditional IRA is pre-tax money goes in, and then you don't pay money on anything that you make. You only pay
Mm-hmm.
on what you withdraw out of
Mm-hmm.
the retirement account. Again, after you're 59 and a half, you can start pulling from those. So those are like long term. Again, I'm 40, so I can't take the money out of those. And then I trade under an LLC. So I have an LLC primary like account, a bigger account that I trade with. And
Mm-hmm.
then I have a separate smaller account at Interactive Brokers, still under my LLC, but it goes to cash every single day. I think I have like 35,000 or 36,000 sitting over there. That goes to
Mm-hmm.
cash every day. So I only use that for day trading, primarily when I can't locate shorts on
Mm-hmm.
Thinkorswim. Thinkorswim has gotten better. I think even with Schwab, like I was able to short SMCI
Mm-hmm.
um, the other day, and I was surprised I was able to locate shares on TD Ameritrade. So, like, if I can't locate shares, then I'll go over to Interactive Brokers.
Mm-hmm.
Or if I
Mm-hmm.
have active swing trades, so let's say I'm long AMD in my LLC accounts for a swing trade. So, like, I'm holding it for a week or two. If I still want to play it intraday, I'll just go into my Interactive Brokers account and then long it or short it in there. So that way I don't
Mm-hmm.
mess with my swing trade. So it kind of helps keep those things separate, and I never feel like, oh, I can't trade that.
Okay.
Cause so I'll be short a stock and long it at the same time in
Mm-hmm.
multiple different accounts because they
Okay.
all have different time frames. Like
Mm-hmm.
long term, I know this in 20 years from now, the SPY is probably going to be higher. I can probably guarantee that. You know, you never want to use the G word, but I could I guarantee what it's going to do next week? No, absolutely
Mm.
not. So it's like you can be long and short same um same thing with the
Mm-hmm.
same vehicle, just with different time frames. And so it's nice to have different accounts to do that with. And then just because of like helping coach people on trading, like I have a little tiny Robinhood account. I don't really do much with that. But
Mm-hmm.
that way, like if someone wants to know how to use the broker, at
Yeah.
least I'm familiar with it. So I
Okay.
have a couple
Sure.
of those like small accounts. Um, but primarily I use TD Ameritrade and Interactive Brokers.
Mm-hmm. 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 Sure. Um, tell us a little bit about your daily schedule. So you mentioned that you don't spend like the entire day in front of your screen, but what your day looks like.
Yeah, so it kind of depends on what's going on in the market too. So
Mm.
I won't say I never spend most of the day in front of the computer, but I wake up pretty early. I'm on Mountain Standard Time. I live in Idaho, and the market opens at 7:30 a.m. here. So I wake up between 5:30 and 6. You know,
Wow.
yeah, I make coffee, eat some breakfast, kind of look, turn on CNBC, look at some news because they do break a lot of news.
Mm.
Oftentimes I'll mute it when I'm trading, but I'll still have it up so I can see if there's breaking news on there. Twitter's a good resource for a lot
Mm.
of financial information if you follow the right people. I'll look through earnings reports during earnings season, so I'll look through those and kind of, and then usually I'll start up my gap scanner 30 to 40 minutes before the market opens,
Mm.
and I have it built for a specific like set of gaps that I like, and then I'll look through that. I'll post it over in my Discord, and then I'll go through and say like, these are the stocks I'm watching for potential longs or shorts. And if they shape up, then I'll take a trade on them and I'll alert it in Discord. And if nothing shapes up, then I'll sit there and watch for a little bit. Depending on economic news, like
Mm.
CPI has been a big one recently. Last year was, I mean, you had to watch CPI, and then treasury auctions. Like I think there was probably just a treasury auction within the last, I don't know, 20 minutes or so because I see TLT had a big move. So I'll go to like Bloomberg's economic calendar and I'll
Mm.
scan through that so that I know, okay, at noon there's X, Y, or Z, or like the Fed is speaking. So I have to be at the computer at noon. So I will plan like around some of these events. Not that I'm going to trade during them,
Mm.
but I will trade after them based on,
Mm.
how the market interprets it. And then I always check like right before the close just to make sure that like I don't have options expiring in the money. I didn't leave an order open because I have done that before. Where especially I try to use OCOs, but sometimes I don't, especially on interactive brokers. So like
Mm.
let's say I had a partial order out there and it never filled. Well, I want to make sure that that order is cleared out and there's no like
Mm.
open positions overnight in that specific account. So I'll clean up my orders at the end of the day, 15 minutes before or so. And then, in between that, like I'll schedule all the life stuff, whether it's running errands or, going to visit family or just,
Mm.
the day to day. It's cool because the day to day things, like there's a lot of stuff that's closed on the weekends. I don't have to stress about it. because I can go during the week. I'm not like, oh my gosh, I have to be, locked in from 9 to 5, and I only get 12 to 1 for lunch. Like I can kind of plan my own.
Yeah, it's just amazing. Um, I forgot my question. Yeah, what was the best day in trading for you? If you just, if you go through your entire trading career, what was the
Mhm.
best day that you experienced while trading?
I think it's probably like the one that just immediately sticks out in my head because I've been trading, like watching the market almost every day now for
Hmm.
7 years. So, but the first one that sticks out in my head was, I want to say it was in 20. I would have to look at the chart, but it's either in 2017 or 18. But when Amazon, obviously before the split, when it gapped over $1,000, because I remember it was right before Christmas or right after Christmas, because my parents still lived in California and I was
Hmm.
visiting them for the holidays. And I remember sitting at their breakfast table or whatever. Everybody else is asleep. So market opens an additional hour earlier there, so I was up at the crack of dawn trading, and like Amazon calls before I had bought a couple Amazon like flyers were 10 cents, and when it gapped over 1,000, those things were worth well over $1, I think, at like right at open. And then just day trade wise, like there were some just amazing day trades. I think it was Google and Amazon reported that day. So I think I made like 3 or 5 R's within the first, 15 or 20 minutes. So like that definitely sticks out as one. And
Wow.
if I look at a chart, like I can go back and see like this is the gap. And I remember
Yeah.
sitting at the table like, oh my God, this is the greatest gap I've ever seen. That kind of thing.
Yeah. So, what was the biggest amount you have ever made in a single trade?
In a single trade,
Hmm.
I mean, it's probably again, I don't know if this is a trade because it's like a longer term investment. I've
Hmm.
traded around it, but like I own Google at $12 a share, and it's whatever it is now, 160 or 80 or
Yeah.
something. Let me
Yeah.
see,
And have you been ever?
140.
Yeah.
So like,
So
but
have
that's a long term one. Probably that
nice
Amazon
one.
trade back then. Roku, I had a really good trade on Roku one time. I know it doesn't sound like a lot, but like if I make $1,500 in a day, like me, that's a great day. I mean,
Yeah. I mean, it's
that's
not
plenty of
bad.
money for me on an
Yeah.
intraday basis. So like there was a Roku gap that I remember it consolidated and squeezed and went sideways for like 2 weeks, and it gapped up and it gave me the perfect opening range doji to take an opening range breakout trade on, and I sized up on it. So I went a
Hmm.
little heavier because it was so perfect.
Hmm.
So that's one that sticks out. But yeah, I'm not the type of trader that's like, oh, I made $50,000 doing X, Y, or Z like on a day trade. Because if
Yeah.
people are making that amount of money, like they're also risking huge losses as well, probably, and that's just
Hmm.
not really my style.
Yeah. Yeah. Sure. Some people they talk about flipping accounts. Have you ever flipped an account yourself?
What do you mean by that?
I mean, like, yeah, that they start with, let's say, $1,000, and within, like, let's say, one or two trades, they made $2,000, $3,000.
Oh, okay. Yeah. Not really. Like, I don't really need to do that because like my accounts are bigger. Like, it
Mm.
doesn't do anything for me to be like, oh, let me open a new account with $500 and then just YOLO it all into one thing. I
Yeah.
will say, like, I had a small, little Roth IRA that I had started separately. I stuck it all in Palantir at like $8, and that thing's well, it was over. I think it's around 22 or something
Yeah, it got
now.
even
But
25. I sold it at
yeah,
22. I was really, I was very happy because it made, like, within one day, it made like plus 20%. So I sold it. And once I sold it, it went up to 25. So yeah.
yeah. So like that one, and again, I started that initially smaller, and that thing more than doubled. So that was kind
Yeah.
of nice. But yeah, otherwise, like the small account challenge stuff, like that doesn't really do anything for me
Mm.
other than like, I guess, impress people on Twitter. But there's no point in doing that for me. That's just not where
Yeah.
I'm at in my trading career.
Yeah, yeah, sure, absolutely. And what about the bad days? You know that you forgot to close your position or whatever. So did it happen to you?
Yeah. So there's been a couple days where generally my largest losing days are if
Mm.
I am trying to fight the market. So like if I get stuck on a like,
Mm.
oh, sometimes some of the gap downs or drawdowns on SPY, like into particular levels, like where I think, oh, we're gonna fade, we're gonna bounce. If I try to fight that trend,
Mm.
and I'm a breakout trader by like nature, so because I know I'm in, if I'm in on a breakout and it either traps me and doesn't work, and then I can get
Mm.
out, or I can, I know I'm in, and then I can ride the momentum, back up. But there's been a couple days where this has happened where I'm like, this is going to, I know it's going to bounce. I just, obviously I don't know when, right? So I think like, oh, the bottom's in. I'll take a small breakout for a reversal. It'll trap me. It'll stop me out. It'll bounce like right off of my stop. Everybody has experienced this.
Yeah.
And that's the thing that is like the most irritating when it like bounces right off your stop. So I'll get back in and then I'll put my stop, back below that. And then it comes back up, gets you in, and then immediately rolls back
Mm.
over. If
Mm.
that happens like twice, um, I'm usually done for the day. But um, you know, if it if I have one of my worst days,
Mm.
then I can give back, 1 to 2, 1.5, 2R. Usually I'm pretty good. Like I won't go over a 2R loss in a day. And
Mhm.
so but those are like bigger loss days for me because I don't generally, if I lose less than an R, most of the time I'm like, okay, well, the one trade I liked today didn't really work out. Or, I will like, if I lose an R, then maybe I'll make a half R or I'll make 1.5 or something like that. So
Mm.
generally, if I go back and look at my month, my larger drawdown days are those when I just like refuse to give up my bias, but I'm much better at not doing that now.
Mm.
Every so
Mm.
often it still happens.
Mhm. Robert, I know that you coach and teach people as well how to trade. What are usually the biggest mistakes they make? You know, if you could say like, hey, they most of them they make these three mistakes, and maybe you could divide it like the technical, fundamental, and maybe psychological mistake.
Yeah. Yeah. So first I would say psychological is they don't have the right expectations. So
Mm.
like they'll start with, 10, 15,000 bucks, 25,000 bucks, and they'll go, oh, well, I'm going to be a full-time trader. I'm going to make a living off this. That's probably
Yeah.
not going to happen. You're probably not going to be able to do that unless you at least have $100,000. And when you first start, like you are literally the worst you're ever going to be because you only get better. So the entire goal when you start trading is not to lose all of your money. That's the main goal. If you can survive long enough and you have capital, you will eventually, as long as you're putting in the work, I think you can be a profitable trader.
Mm.
But it is really a marathon, not a sprint. So the right expectations. Um, and then like technique wise or skill, I would say is not using stops. The cool thing I like about stops is my stop order is in there and I'm wrong, the computer automatically gets me out. I don't have to think
Mm.
about it and go, oh, well, maybe it's going to bounce here. So I'm going to wait for a close, below $100, let's say.
Mm.
Well, yeah, it could close at 99.99 and then I can get out. Or, the candle could close at like 97 and then I lost
Mm.
even more money because I didn't want to take a loss or I thought it was going to bounce. So I would say using stops, like as far as
Mm.
technique. And then as far as like technical analysis, I think trying to trying to find like the perfect setup.
Mm.
And so they strategy hop because they think like, oh, I'm going to find the silver bullet in the market, like
Mm.
an ascending wedge or a head and shoulders or this or that. Like, technical analysis is great, but if you have technical analysis, you have a story. So, like, the AI story is hot right now. Might be
Mm.
running out of a little steam at the moment, but the AI story was hot. Like, for a while, EVs were hot.
Mm.
EVs have not been hot. Like, Tesla's been performing like crap. So if you have technical analysis, you have a hot story or a hot sector, you have some type of momentum, and you can have some fundamentals, then I think you can be successful. But if it's just trying to find like, oh, they're the silver bullet strategy, like breakouts work. Not all the time, but they work. It's when to use them, and then how do you know you're wrong so that you can get out. So I would say strategy hopping is probably the biggest one.
If there is one rule that every single trader should always keep in mind, what the rule would be?
Always have a stop. Never trade without a stop. Like I've had it before where I think it was on Tesla, but I was trading and I can't remember if I took a partial or I had just got into the trade and I was getting in quick. And so I did not use a first triggers OCO. And then like my internet went down. So I don't know, a car could hit a power pole down the road. And then it's like my house is without power or like my internet went off and I don't have a stop in. I'm like, oh crap, let me try to get on my phone and put a stop in. So always have a stop in. And if you don't have a stop, like again, limit the amount of time. Like, oh, I took a partial, need to rebuild my stop, but otherwise, like always have that stop in because you never know what's going to happen, or some like random news is going to come in, and you never know what it's going to be. And before you could get up and go to the bathroom. I had actually a kind of like a family friend that I was helping trading, and I don't know if I never explained it to him. I think I did. Maybe he just didn't understand and didn't really know. But he was like, "Oh, this is so stressful. Like, I haven't gone to the bathroom in 2 hours because I'm in this trade and I don't want it." I'm like, "Dude, use a stop, man. Like, you can have a stop so you can like leave and go to the bathroom, and you don't have to worry about the stock like rocketing lower on you." It's like always have a stop so that you don't have to feel like, "Oh my gosh, I'm locked in. Have to be here. 24/7. Can't move a muscle." So having stops and targets and things like that, but the stop is absolutely critical.
Essentially, yeah. I know that some people think that trading is a lonely job. What about you? Like, do you feel lonely sometimes?
Yeah, it can be. It's very important in my opinion to have a group of people that you trade with. So like you mentioned, Leah and I have been trading together for over 3 years, almost 4 years now. There's other traders that I've traded with. Like there's a guy out of Los Angeles that I've traded with literally for like 6, 7 years. And I had never met him in person until a little over a year ago.
So how did you meet him? I mean, like
We happened to be on
online.
it. Oh, we were trading in another like trading community. And then we're both no longer there, but we still trade together like on Discord and whether it's texting and all that. So we trade together like on the internet. And yeah, I happened to be in San Diego for like a family vacation. I'm like, hey, I'll drive up to LA, and like we went and had lunch, and I'd never met him face to face before, but we had talked on the computer or Zoom and for
Okay.
years before that. So I do think it's important to have people that you trade with every day. I have a friend now that's retired from the military. His name is Josh, and he and I trade together almost every day on
So
on a voice
so
call.
do you discuss with them like what trade you wanna go in, or like,
Yep.
yeah?
Yeah, yeah. So and sometimes like that's good. Like on I think it was Thursday. On Thursday, like he helped me get in a trade in Tesla. So like I wasn't looking at Tesla at the moment, and he was like, "Hey, Tesla looks good here." So I went and looked at it, and I immediately got in. I'm like, "Yeah, I agree." I got in, and I probably would have missed that trade, and it did not really retest. So if I would have came to it late, tried to do a limit buy, I wouldn't have gone in. So like we help each other find trades that way. And other times, sometimes we talk each other out of trades. Sometimes good, sometimes bad. But it's one of those things that like, yeah, having someone else that you can talk to, because generally like if you're married or dating someone, like your spouse will not understand trading for like
So you don't
multiple
talk
years.
about trading with your wife?
I do now, but like when we first like were dating, it was Like she didn't. It's because it's like a different language, right? Like she didn't know what I was talking about. And then all of a sudden one day she's like, "What's this PDT thing?" I'm like, "What are you talking about?" She's like, "Oh, I have a Robinhood account and they froze my account because she had heard it was like Beyond Meat. Like this is when Beyond Meat was hot and everybody was trading it.
Ah.
She had been like day trading Beyond Meat and like didn't tell me about it. And so then they froze her account for 90 days. Um, but like generally, like they just don't understand,
Mm,
especially not necessarily just your significant other, but like your family. They
mhm,
they don't they don't get it.
mm.
After a while, like especially if you can make money, like they'll believe you. But otherwise, it's such a different industry because
Mm,
I tell people I could go to work and lose money. Like I
mm,
met with someone the other day. They're like, "Oh, you're a day trader. Must make all kinds of money." I'm like, "Yeah, sometimes, and sometimes I lose money too." And that doesn't. They're like, "Oh, well, you lose money. Why would you do it?" I'm like, "Well, yeah, you're never going to be right 100% of the time."
yeah.
And so it's really important to have other people that like understand
Mm,
the emotions, the psychology, and then it's a probabilities game. And it's just like, well, if I flipped a coin and every time it was heads, I pay you $2, and every time it's tails, you only lose $1. You would do it all the time
mm,
because in
mm,
the long run, over thousands and thousands of coin flips, like you're going to come out ahead. And so a lot of times trading is like that as well. Although, like, and again, as long as you're buying like good companies, even just investing over the long term, the market goes higher,
mm.
the US
What?
market at least.
Yeah. Was there a time when you doubted yourself that you just wanted to give up and
Oh,
you?
all the time. I mean, there are still times I'm like, why am I freaking doing this? Like,
Yeah.
this is such a waste of time. Like, especially when the market is just very like boring.
Mm,
So, I, gosh, was it December or November? A couple months ago, like the market was just really stagnant, and
mm,
so there was just like no day trades. Like swing trades were great, but there's only so much. You set up a swing trade and then you just wait, right? So there was just no day trades available. And I remember, I think I went like 4 or 5 days without taking a single day trade, and I'm like, why am I like? I'm just wasting time just sitting here, literally doing nothing when
mm,
I could be doing something else. Or like I could go back to corporate America and put the
mm,
golden handcuffs back on and make all kinds of money. But I
mm,
don't want my life ran by Outlook, and I don't want to have to deal with like politics and corporate
mm,
drama and any of that stuff. And it's been good because my parents moved Idaho and retired here. And so like if
mm,
they need help during the day, like I can go help them out. Whereas
mm.
like if I was at a regular job, I probably couldn't do that.
Yeah. Oh,
So
yeah.
those are the types of things that keep me going. But yeah, there's times or if you're on a losing streak, it's super easy. Like let's say you lose 5 trades in a row. You're like,
Mm.
why am I doing this? This is, the dumbest career. And then when you make like if you're on a winning streak of 5 trades in a row, you're like, this is the greatest job ever. So easy.
Yeah. I know.
So the good comes with the bad.
Yeah, absolutely. I also wanted to talk to you about fundamental analysis because sometimes I feel like when traders get into trading, they focus on technical analysis. Once they master the technicals, they move to psychology, and the fundamental analysis always somehow like left behind. What about yourself? Like, how much time do you spend on fundamental analysis in comparison to technical?
So it also depends on the style of trading. So for like day trading,
Mm,
generally the fundamentals don't matter a whole lot. There
mm,
are, sometimes that they do like right after earnings and stuff like that. Um, but for long term, especially if I'm building a large position, if I'm
mm,
gonna have like 50 grand, 60 grand, 100 grand invested in a particular company, like
mm,
I'm gonna make sure that I do my research. I'm gonna spend longer, right? Versus
mm,
if I day trade it, because I don't care what the fundamentals are tomorrow. Like I'm already out of the stock today. So yeah, for the longer term stuff, I definitely do spend time. Like my larger positions, like let's say an Amazon or a Google, I go through their earnings, and I
mm,
know like what specific things to look at. Like let's say with
mm,
Meta, right? Meta was another one that I had good position in. I'm out of now, but
Yeah, me
um,
too.
I know that like monthly active users, so MAUs, or daily active users,
Hmm.
DAUs, is something that is really important to their earnings. Like immediately, that's what everyone goes to. Tesla is with the gross margins on the
Hmm.
vehicles. So it's not necessarily like just their bottom line, like, oh, their EPS. Because if you're comparing apples to oranges, it doesn't really matter. But
Hmm.
so you have to kind of know like what is important to each individual company.
Hmm.
And sometimes that changes. So like Apple, like service growth is one really big one for them, where it used to be iPhones. Like it was all about how many iPhones did they sell? Well, then they
Hmm.
stopped reporting that. Or like Netflix, was is how many new accounts like have, oh, they went up
Hmm.
by 3 million users.
Hmm.
So that's more important to the stock fundamentally, quote unquote, than just the EPS or the revenue guidance. So it kind of
Hmm.
depends on the individual stock. So learning that and then looking to see like Microsoft Azure, is it growing at 20%? Because that's where a lot of their profit comes from. And so I want to make sure like I'm in Microsoft that the Azure growth for cloud is still double digits over 20%,
Hmm.
because that's what's important to
Hmm.
Microsoft, not how many people are buying computers with Windows on it. Like that doesn't matter anymore. So
Yeah.
that changes from time to time. And so depending on the size of the position that I have and how long I'm going to hold it for, I will
Hmm.
do more research, or I'll listen to
Hmm.
earnings calls and things like that.
Hmm. And do you trade during news?
Not short term trading. I mean,
Hmm.
obviously, like I hold my longer term stuff over news, but no, generally not during news, unless I'm speculating on it. So, like,
Hmm.
let's say, like, oh, CPI is going to come in low and the market's going to rip. Like, yeah, maybe I'll position if I feel like I have a good edge, or I feel like the market is leaning too heavy on one side, then yeah. But most of the time, no. And I'll trade afterwards. So, like,
Hmm.
another thing is after Powell talks. So the announcement gets released at 2 p.m. Eastern, when they have the Fed meeting. The market, gyrates a little bit. He starts talking. Recently, when he talks, market kind of rips higher. And then that initial move almost always gets faded. So, like,
Hmm.
sometimes I'll fade that, but I'll wait until after that move comes in. Or like
Hmm.
Nvidia, I'm not going to play the earnings. I'll probably trade it one way or another tomorrow afterwards, but I'm not going to play like the earnings on Nvidia today.
Hmm.
So
Hmm.
generally
Hmm.
no, and I'll trade the aftermath.
Okay. So are there any other stocks that you are looking into?
Like longer term, short
Long.
term.
Yeah.
So longer term, I actually started a position on Palo Alto Networks today. I mean, very
Hmm.
small so far, because
Hmm.
the first day it's down 27%.
Oh.
So I started building a position on this. The results were good, just their guidance was a little bit low.
Hmm.
But it's one that I had been watching and I just could never find an entry or didn't get in. So I'm like, hey, it's down a ton. There wasn't really any like gleaming issues in the fundamentals that I saw. And
Hmm.
so, I started a small position on that I'll continue to. I use like a pyramid strategy. So I'll have levels that I'm like, okay, I'm going to buy off of these levels. Once I have my position established, I can establish like where is it that I'm going to get out. And then I can kind of go from there and like hedge with
Hmm.
options and things like that.
Hmm. Hmm.
So
Hmm.
that's one that I started a position on. I do still really like Palantir. I have sold some, and then I have some covered calls and some more. But if that dips, I'm willing to buy more of it. Um, that's another one. What else? I just trimmed AMD. I just trimmed Amazon. I just trimmed Google a little bit. Apple needs to hold 180. Otherwise, I'm probably going to look to short that. Like, I think we should have a little bit of a pullback. This
Hmm.
next couple weeks is just seasonality wise supposed to be the weakest historically. It doesn't always play out, but um, so yeah.
Yeah. Nice
Pins
one.
was a really good one, like, but I'm out of that now.
Oh.
I like those stage two. Like if you look at Dow theory, there's like the
Hmm.
stage one consolidation, those stage two breakouts. If I can find something in a
Hmm.
stage two breakout that I can play a little more aggressively for a little bit longer, like a midterm swing, be in it for a couple months. Like those are the ones that you're gonna make the most money on versus like a day trade.
Nice one. Robert, since For Traders is a prop trading company, what about you and funded accounts? Have you ever had a funded account?
I've never had one. Again, it was just because I was in a position where like I didn't need to. Like, there's no reason. Like, I have my own account funded with real money. So I never really needed that. I do think that it's possible for people to trade profitably through that. I think it's a good idea that there's rules like associated. It forces people to have rules, right? Like if they draw down a certain amount, it blows the account up. If they trade through news events, like they're going to get shut down. So it can teach people some good things like that. Um, I know in the US, there's like some restrictions on what you can and can't do, like CFDs aren't allowed and things like that. But I think outside of the US, there's probably like less restrictions and it's probably more, there's like more stocks and equities and things available to people to trade with those. But otherwise, I haven't had much experience with them now.
Last question. What are the top 3 rules every single trader should always follow?
Always have a stop. So it's okay to be wrong. Like you're probably going to lose 30, 40% of the time. But once you know you're wrong, like get out, don't stay wrong. It's okay to be wrong, not okay to stay wrong. So use your stop. Um, Assuming you're on the long side, sell into strength. Like don't wait for a stock to come all the way back to your entry or turn red. Just sell into strength. Take the gain that you have. You can always get back in. So even if you have to wait like 6 months or something like that, like a stock will always pull back at some point. Or you just find a different stock. Like it doesn't really matter. So sell into strength, again, assuming that you're long. And then the third one would probably be that price action is king. Like every single indicator is lagging other than price. Um, so no matter what indicator you use, and I do use indicators like the VWAP, some volume indicators, volume profiles, and things like that. But price action is key. And so it doesn't matter like what, especially short-term trading, like what fundamental stuff is going on. The price action is key. So like SMCI, maybe it did, maybe it didn't make fundamental sense at like $800-900. But if the price action was bullish and you were able to ride that price action, then that's what that's what you make money off of. Only price pays, I guess would be the third one to sum it up.
No, thank you very much. Robert, thank you very much for your time. It was a pleasure doing
Yeah,
interview
my
with
pleasure.
you. So thank you
Awesome.
very much,
Yeah, thank
and
you.
good luck with trading and as well
Thank
as
you.
with your personal life.
All right.
Bye.